Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me, Kanishka Sarkar. In the next half an hour, we'll take you through all the top buzzers in trade, why they're buzzing, on the back of news flow or on the back of technicals. But before we get started with the show, let's take stock of how the market is shaping up. Kanishka, we have managed to scale this 25,150 levels. In fact, at some point, we were very, very close to 25,200 levels as well. We have cooled off from there. But nonetheless, we're trading with gains of 100 odd points, and Nifty Bank continues to be the outperformer. In fact, the entire financial pack is doing very well today.
Absolutely. The financial pack is doing very well today. In fact, if you look at some of the top gainers today, it's Jio Finance, HDFC Bank, BSC, all of these financial counters, they are doing very well. The Nifty Financial Services Index, that is up 0.7%, whereas the Nifty Bank Index, that's up 0.6% right now. But if you take a look at things on the Nifty, it's up nearly 100 points right now. It has sort of recovered from the day's highest point, but a good recovery coming in after the positive start that we saw for the week. It's Bharti Airtel and Jio Financial which are leading the gains on the Nifty. Sensex, on the other hand, is up nearly 400 points, 385 to be precise right now, at that 82,178. If we talk about the lager, that's Trent, which is the one that's losing the loss, leading the losses on the Nifty pack. It's down about 2% after its Q2 update. So yes, that's how the market is largely shaping up, Ankita.
All right, so that's the market at this juncture right now. Advanced decline ratio, though it is tilted in the favor of declines right now. But nonetheless, we are holding the fort on the index level. But let me get on board Laxmikant Shukla, technical analyst, institutional research, Yes Securities India, is now joining us on the technicals. Hi Laxmikant, thank you so much for taking the time out and joining us. Let's get started with the first stock for the day. That's Mahanagar Gas, that's up 3%. Now that is on the back of the fact that they have signed a memorandum of understanding with Oil India Limited to collaborate on an LNG value chain and explore clean energy opportunities. Now this partnership aims to accelerate the adoption of cleaner fuels in the long-haul transport sector, enabling greener logistic solutions and reducing pollution. The collaboration will assess the viability of LNG in heavy-duty transport and explore the scalable clean energy projects. On the back of this MOU, MGL has given up the morning gains, but nonetheless, it is holding the fort with gains of 2%.
All right, so that's MGL for you in focus on the back of that news flow. But moving on, Laxmikant, you've picked out Petronet LNG for us. It's up nearly 3% right now at the 288 odd level. Where do you see the stock headed from here on?
Good afternoon to both of you. So Petronet has given a strong breakout from its double bottom price pattern on the daily chart with the formation of bullish candle. It has also surpassed its 2050 DEMA levels with the formation of bullish petrol candlestick pattern. So from here on, we expect more upside in Petronet toward the levels of 305 to 308 levels, and on the downside the levels of 280 could be seen as the strong support. As long as it holds this support, we will see further upside move toward a target of 300 to 305. So one can buy around the dip toward the levels of 280 to 282 with the stop loss of 278, and we will see further upside move toward the levels of 300 to 305 in Petronet.
All right, so that's the upside target, 300 to 305 for Petronet LNG. But moving on to the next counter that is in spotlight today, it's Trent. In fact, it's the top Nifty loser today. It's down nearly 2% right now. It's in focus after recent brokerage updates. They've highlighted mixed views as far as the near-term growth for this company is concerned. First up, Goldman Sachs. That has cut its target price to 5,300 rupees from 5,600 rupees earlier, maintaining a neutral stance. They say that the slower than expected recovery, despite store expansion with same-store sales growth, that is turning negative in key markets for Trent. On the other hand, lower throughout in new tier 2 and beyond stores, that is also weighing on growth, prompting a 5% cut in FY26 to 28 earnings estimates. Meanwhile, Antique, that has remained positive, maintaining a buy call with a target price of 7,031 rupees. They highlight that Trent's aggressive expansion, that's adding 40 Zudio and 13 Westside stores in Q2, with Westside set to drive revenues in the coming quarters. So a very positive outlook coming in as far as Antique is concerned. But on the other hand, Morgan Stanley, that has cut FY26 to 27 revenue estimates by 8 to 10%. And hence, because of all these mixed brokerage views coming in, Trent is in focus, down nearly 2% right now.
All right, so that's trend that's losing away in trade as the biggest laggard on Nifty 50 with cuts of 2%. But let's move on to a counter that has been doing very well. In fact, for the past few weeks, it has done very well. That is SBI Cards that has moved up almost 13% in the last 4 odd weeks. Laxmikant, do you see this positive momentum to continue?
Yes, Aginta, I am seeing positive momentum in SBI card after giving double bottom breakout. The stock moved higher, and now it has started consolidating below its downward sloping line. So we expect upside breakout from this falling trend line. I think once it crosses the levels of 915 to 918, then after we will see further upside move in SBI card toward the levels of 960. So that would be our target for the upcoming sessions. And this stock has also seen bullish crossover in RSI, and MACD is also trading in the positive territory. Since averages are also started moving higher, so we expect upside move in SBI card toward the levels of 960. In case of any correction, I think the levels of 870 could be seen as the strong support for the SBI card.
All right, so that's about SBI card. Thanks, Laxmikant, for that view. But we'll get back to you in just a bit. Time now to take a look at the primary markets. Now, Canara Robeco AMC IPO, that opens on October 9th, and they're eyeing a valuation of 5,300 crore rupees. And it's a complete OFS. And to get what exactly they are going to do after the IPO, Rajneesh Narula, who's the MD and CEO of Canara Robeco AMC, is now joining us. Hi, Mr. Narula. Thank you so much for joining us. Before we get into details, first up, talk to us about what are the changes that you're looking at post your listing probably next week.
For us, essentially, not much changes in one sense, a lot changes in the other sense as well. So what doesn't change is our focus on our business, the fact that we are one of the fastest growing AMCs in the industry. We continue to be an equity focused fund house. All that remains the same. What changes for us is, yes, there is now going to be an opportunity for the public to actually invest in this company because of the OFS that is proposed. Both the shareholders will dilute a combined amount of 25%, 13% for Canara Bank and 12% for Oryx Corporation, thereby giving the opportunity for retail investors to participate in the growth of this company. What will also change for us is in terms of our brand. I believe a great amount of brand visibility will happen for us, given that there is now a wider audience that invests in stock markets that will know about us. So that's going to be very good for us and fantastic news for the company as well.
Mr. Narula, as far as your AUM growth is concerned, your equity growth has been very strong, but your debt growth, if I understand correctly, has been single digit in 3 years CAGR. Anything that changes here?
We are an equity focused fund house. 91% of our AUM mix is equity. Our fixed income book is actually growing. It's not a single digit growth. In fact, it's more than double digits growth in fixed income, but it represents a small proportion of our AUM mix. But this is, actually, if I give you a little story, we were not like this when we first started. We used to be a fixed income dominated fund house in 2007 when we started. Over 80% of our AUM mix was fixed income at that stage. And then, of course, we had Lehman Brothers that happened. We learned from that crisis. We learned what were the opportunities as a result from those crises in terms of businesses. And we realized that equity markets were far more resilient during that period, including having liquidity during that period. So we changed our focus, did a pivot, changed our business model, became a more equity focused fund house. And that's why we today have 91% of our AUM in equity.
All right, understood, Mr. Narula. Now, talking about your AUM growth, like you mentioned, overall it has been pretty strong. So what can we expect here going forward? The base is higher now, and I understand that you cannot give a formal guidance yet, but is the growth number on a higher base sustainable going forward?
We are very confident of our positioning in terms of the business model itself. Equity is expected to contribute more to the industry AUM as we go forward. That's what the industry reports say, that the industry AUM is slated to double in the next 5 years, and equity will be the prime driver for that. And because of that, we are well positioned because of the model that we have, that we will get a disproportionate share of equity coming into us as well. So we are very confident of our growth going forward.
Right. So also, what is the risk of yields falling for you?
Well, we have a different perspective on yields. For us, we believe in operating leverage. It's a capital light business. You just need 50 crores of net worth to be able to be in this business. We all can handle more AUMs and manage more money with the same amount of capital. So a fund manager, for example, can manage 1,000 crores or 10,000 crores. The relative incremental cost for doing that is limited. So hence, yields are not so material. It's about growth in AUM and the right kind of market segments you grow in. That's more important.
All right, Mr. Narula. Now, moving on, let's also talk about your market share. What's the outlook over there? How large is this untapped customer base as far as Canara Bank is concerned for you? So, what's the outlook there in terms of market share?
In terms of market share, we are at 1.5% in terms of total AUM, but in equity, which is where we are in terms of focus, we have a 2.5% market share. So we are disproportionately higher on the equity market share. You're absolutely right. Canara Bank has over or close to 10,000 branches. So we have huge potential there. We are going to make SIP a cornerstone of our strategy through the bank channel. So that's clearly something that we're going to partner with them. And there is a lot of potential there. So clearly, we believe that that distribution channel is very, very good for us.
Right. Mr. Narula, also in the last few years, how have the trends of tapping into Canara Bank customers playing out for you?
We've made very good progress over the years, and the numbers of customers that have actually invested through the channel with us has grown dramatically over the last 5 years. We continue to make good progress in that channel. But yes, there is huge potential because especially post the merger of Syndicate Bank into Canara Bank, there are newer branches and newer territories that have opened up for us. So clearly we're focusing on that as well.
All right, now moving on. Lastly, Mr. Narula, how do you view the new scheme launches that have been happening in this space? How have they performed, and any plans for the same going forward post your listing?
We're very measured about new scheme launches where we need to look at investor need and then, of course, our ability to actually launch the scheme and make a success of it. Those are two big parameters we look at. We have a philosophy around scheme launches. We do not believe in first mover advantage in that space. Let me give you an example. If a mutual fund house comes up with a particular scheme, they may be the first in that category. They will collect whatever money they do during the NFO phase. Thereafter, any flows will depend on fund performance. If the fund performance is good, they will attract flows. If it's not good, they won't get flows. You could be the last mutual fund in that category. If you deliver performance thereafter, you will get your rightful share of flows. So for us, we always like to wait and watch. We also like to make sure that we have enough bandwidth for launches. It takes about 2 months of bandwidth of the investment team and the sales team when you do a product launch, and we want them to focus on existing products as well. So we try and balance both.
Right, Mr. Narula, thank you so much for taking the time out and joining us, and all the best to you for your IPO. But with that, it's a time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzzes on the other side. Stay tuned.
With me, Kanishka Sarkar and Ankita Saxena, time now to shift focus to some key interactions with ET now. UPI will continue to be a major mode of transactions. That's the word coming from Bharat Pay's founder Shashwat Nakrani, who believes that linkage to credit cards will drive the usage even further. Let's listen into his comments.
This is very different. As we all know, UPI has been nothing short of revolution in this country. Everyone's by default payment mode has become UPI and scan and pay at any place they go to. Today, UPI has been largely dominated by debit transaction, which debits from your bank account to another bank account. But with the launch of credit line on UPI, with the launch of credit card on UPI, our view is that it's going to move a lot more towards credit on the consumer side. A lot of people, as and when they keep getting sanctioned or credit and they keep linking it to UPI, they will prefer to use credit at any scan and pay day-to-day transactions and pay at the end of the month as a bill. And that's where we see the future of UPI going to, and that's where these kind of products really become important.
All right, with that, we have come to an end of the show. Thank you so much for tuning in. Kanishka and I will take a leave, but don't go anywhere. Market action continues on ET Now.